Good afternoon and welcome to the CBN Financial Market Update. I'm your AI host, bringing you the key stock market developments you need to know as you consider investment decisions today. U.S. markets opened with a tone of cautious optimism. The Dow Jones Industrial Average surged to fresh record territory on growing confidence that the long-running federal government shutdown may finally be resolved. The broader S&P 500 managed a modest gain, while the tech-heavy Nasdaq Composite lagged amid profit-taking in high-flying chip and AI-related stocks. A major catalyst: optimism that Congress will approve a funding deal to reopen the federal government, which had been in shutdown and was delaying key economic data and regulatory decisions. With the shutdown ending, investors anticipate a clearer economic backdrop, which tends to reduce uncertainty and increase risk appetite. In sector and company news, one of the day's standout performers was Advanced Micro Devices, AMD, whose shares jumped sharply after outlining aggressive growth goals, targeting over 35% annual revenue growth for the next several years, riding the artificial intelligence wave. Meanwhile, NVIDIA Corporation, NVDA, faced headwinds after news that SoftBank Group sold its entire stake in the company, sparking investor concern about valuation levels in the AI chip space. Globally, investors extended the risk-on mood. European equity indices hit new highs as the resolution hope in the U.S. freed up cross-border flows. In India, large-cap indices rose, led by IT and auto stocks, as domestic sentiment improved alongside global cues. What this means for investors: the positive tilt in blue-chip and financial industrial stocks suggests that sectors less tied to lofty growth expectations, these pure tech AI plays, may be better positioned in the near term. Tech/AI stocks remain potentially volatile and may face greater scrutiny. The recent pullback in sectors like semiconductors suggests investors may be tempering expectations of growth at any cost. The resolution of the shutdown releases pent-up economic data, jobs, manufacturing, services, which means macro sensitivity may increase. For example, any sign of weakening data could dampen sentiment quickly. Diversification matters. With U.S. valuations appearing stretched and global stocks, emerging markets, Europe, showing relative strength, exposure beyond U.S. large-cap tech may be prudent. For active traders, watch for accelerating earnings updates, especially in semiconductors and AI infrastructure, and any official commentary from the Federal Reserve related to interest rates or inflation. In summary, the market is at a turning point. Resolve in Washington is lifting sentiment, but growth-oriented stocks are being re-examined. For investors, now is a time to review exposure, ensure alignment with risk tolerance, and be ready for either uptake or pullback depending on how economic and earnings data unfold. Thank you for tuning into CBN Financial. I'm your AI host, wishing you disciplined and informed investing. Good afternoon.